Hello and welcome to the Small Business Briefing. I'm Brian Kelly, CEO of the Small Business Association of Michigan.
Hi, good afternoon. Thanks for tuning in today. I'm Sarah Miller, Vice President of Communications here at SBAM. We appreciate you joining us. I want to welcome one of our new VIP members, Data Guardian. They specialize in confidential record storage, hard drive destruction, document destruction, and scanning. So welcome to the Data Guardian team. All right, Brian, we have a few things to kind of check off our list today. Let's start with new 401 contribution limits that were released by the IRS.
Yeah, every year the IRS establishes new limits. There's like an inflationary type increase on what can be contributed outside of the employer part of the plan to 401ks. So the amount that the individual employee can contribute again outside of your match that you give as the employer, your match plan. It goes up to from 23,000 to 23,500. So it's getting awfully close to $2,000 a month. There is a separate kind of catch-up provision for those that are age 60 and up for 401ks. There's a catch-up contribution, an additional catch-up contribution limit of $11,250. And then that's for those over 60. And if you're between 50 and 59, that goes up to 7,500. So that's in addition to the regular limit that we started with. And then for IRAs, there's another limitation right now. It's 6,500, and that's going to go up to $7,000 next year. So just a few changes that you'll want to be aware of, especially if you offer a 401k to your employees.
All right, now we have a few things that we're going to kind of like a checklist of items that business owners should be thinking about as we come to a close on 2024. Let's start with minimum wage.
Yeah, there's a bunch of things on tap this year. It just seems like there's several things that are changing or about to change. And what you won't see on this list is like the tipped wage credit or the paid sick leave implications, because I think there's some chance that those will change before they go into effect on February 21st. So the things we're going to cover today are either the things that we are sure are going to change, or we're pretty sure are going to change, like there's not going to be action to undo them before they take effect, or in some cases, they've already changed and there's something that you already should be thinking about. So first, starting with minimum wage. Right now, it is $10.33 an hour for most workers. And that will go up to $10.56 on January 1st. That is under current law. There's already just a regular inflationary increase that happens on January 1st of each year. Because of that adopt and amend court decision, it will then go up on February 21st to $12.48. So you're going to have some successive increases in minimum wage. You might want to start to think about what that means for those that are at or near minimum wage. If you have people that have been working for you for a while and they're over minimum wage, but there's a certain type of a margin, just might want to think ahead a little bit about what it might do to your wage scale overall, so that you're not surprised or in a position where maybe there's some internal resentment that new folks are making the same amount as those that are more experienced have been with you for a while.
All right, now let's talk about some different threshold changes for the Fair Labor Standards Act.
So this one is already halfway in effect. So there's two steps. One of those two steps has already happened on July 1st of this year. This is the threshold under which, when somebody's regular pay is under a certain threshold, they automatically are entitled to overtime. Doesn't matter if they're salaried, doesn't matter if they have managerial responsibilities. If there's this threshold, anybody under this threshold automatically is entitled to overtime. Again, even if they're salary. Doesn't mean you have to switch somebody from salary to hourly. That's not what it means, but it means that you have to pay them when they're over 8 hours in a day or over 40 hours in a week at a time and a half, the regular rate. And so the numbers, it was $35,568. That used to be the threshold on July 1st. So July 1st, just this last summer, it went up to $43,888. I don't know where they get the number. I'm sure it's a percentage increase or some obviously a percentage off the base, and these are odd numbers, but it's all right now as we speak. Anybody whose wages are less than $43,888 a year, they are entitled to overtime. Again, doesn't matter if they're salaried, doesn't matter if they're managers, if they're not, if they're working over 8 hours or over 40 hours, they should be getting time and a half for those hours. And then there will be an even bigger jump on January 1st of 2025. So this January 1st, it will go up to $58,656. So that's a big jump. And that's one where it's gonna pull in, potentially hundreds of thousands of people that today you probably don't even track their hours. And because if especially for those that are salaried and have managerial responsibilities, but it really is something that you need to pay close attention to, because it's a pretty serious violation if people are working overtime and you're not paying them overtime. I will say there is a court challenge on the administrative rule that was passed by the U.S. Department of Labor on this series of changes, but there was not an injunction issued, which allowed that July 1st change to go into effect. And it's not at all clear that there will be any other relief coming, injunctions or anything before the end of the year. Always could, but we really don't know. And we're really kind of, even though we've been talking about this, we have added some resources or put some articles about it on our website. I think there's as I talk to people about this, I've been giving lots of presentations on adopt and amend, and I'm throwing this series of this particular change into my discussion. In the most common response that I get is, I hadn't heard that yet. So this is one, please do make sure that you are properly accounting for and ensuring compliance with overtime rules and these new thresholds that are already in effect and will significantly rise on January 1st of 2025.
All right, next up on our list here, something we've covered recently, but a good reminder, the Corporate Transparency Act.
Yeah, the Corporate Transparency Act, the reason I put this back on the list for today is because we do have oral arguments coming up on December 16th. We talked about that last week. But it really begs the question, like, okay, as a business owner, then should I wait and see? Should I go ahead and file now? And I think that has a lot to do with your risk tolerance and how long you want to wait. But also, I'd suggest that you should consider the complexity of your operation as well. It's the process of physically filing with FinCEN, the Financial Crimes Enforcement Network of the IRS. The process itself, physically typing in the information, is not terribly complicated. They don't have a great website to navigate, but it's not terribly complicated. I've gone through the process myself. But what could be complicated is knowing who you need to report as beneficial owners. So some of them are really easy to tell, like anybody who owns 25% or more of the business, or anybody who has a voting block control of the business, even if they don't have the ownership, but they have whatever minority ownership. It comes with larger voting control. Those are the sorts of things. Those are pretty bright lines in terms of who has to report, but also it has to do with substantial control. Anybody who substantially controls the business. Those that might have influence over the business, or might be a family member of the business that is not an owner, but still exerts some operational or managerial or strategic control over the business. I mean, those sorts of things. There might be a change of control that's in process. So perhaps a business has been sold and it's a 2-year process, and the previous owner still has, say, veto rights on certain things changing in the meantime. That would be an example of somebody who doesn't have active ownership right now, but does have substantial control, or potentially has substantial control. If you have those sorts of questions, that there are non-owners that are in a position to make operational, managerial, or strategic decisions for the business, they might be considered by the government to be beneficial owners, even if they don't have ownership. So if that sounds like you, if you're saying, boy, I can think of some people in the business and I'm not really sure if they count as beneficial owners or not, rather than wait until and see if the courts decide in our favor and if they give an injunction while it goes through appeals, because it most certainly will go through appeals, win or lose. The it probably makes sense for you to still go through and determine whether or not you need to have a lawyer help you think through these things. Or if your business is pretty straightforward and obvious, like you know who controls everything, you know who the beneficial owners are, and it's straightforward. Yeah, maybe it's not going to be that big a deal to wait a little longer because you have until the end of the year, as long as your business was in effect before the 1st of January. The but if not, then it probably, and especially if you're going to need some advice from a lawyer, it's probably getting to that time of year when you better start really thinking about that. The other thing I wanted to mention is that the IRS has also declared that those of you who had inactive businesses that were still in existence before or when as you entered into 2024, to the extent that you went by and said, you know what, that entity's been on a shelf, I've used it a long time, I'm just going to dissolve it. What the IRS said was that if you had a business that was subject to reporting this year, even if you closed it down and dissolved it, you still have to do a beneficial owner filing. So I'm afraid that there's a lot of things in this law that I'm afraid people are going to miss. And so that's why we keep on talking about it. It's why it's really important. So we do have oral arguments coming up in federal court in our lawsuit against the Corporate Transparency Act. But in the meantime, please be ready, please understand, and please comply when it comes right down to it. Come December 31st, 2024. Make sure that you've done everything that you need to do.
All right, thanks, Brian. A couple of things. We actually do have a webinar coming up this Thursday with our partners at Occam's about the CTA. And if you have a pretty good understanding of who is a beneficial owner in your company and you want some assistance getting things filed, they'll be able to help you out with that. So I recommend signing up for that webinar or just watch your email if you're a member. We'll be releasing some details soon on a new service that can help you. So again, that's a Thursday webinar. I think it's a late morning one. You can find it at sbam.org/events. All right, Brian, final on this list is a status on the independent contractor situation.
Yeah, so independent contractor rules changed earlier this year. And again, we covered it pretty substantially at that time. And there's still the resources that are our website for the test. There's a 6 or arguably 7-part test to whether somebody qualifies as an independent contractor. If you haven't reviewed that yet, the new rules are already in effect. I have not seen the government out there enforcing the new rules, or at least they're not enforcing the new rules any differently than the old rules before. However, it's not unusual for this, being an election year, for there to be kind of light enforcement or less enforcement on changes. I don't think that we should assume, or that anybody should assume, oh, it's because I haven't heard from anybody, I must be okay. Please do review those rules or review your independent contractor relationships and compare it the way it's structured to the new multi-factor tests, and make sure that you understand and that you feel good that you're in compliance with it. Unfortunately, many of the standards are subjective, so you're not going to be able to read the multi-factor test and determine, yep, I'm absolutely on the right side of that line, I'm absolutely on the right side of that line. They're not tests like that. Unfortunately, they're very subjective tests, but still, being in a position to understand or to defend it if it ever came up is going to be pretty important, because they do have stiff penalties for non-compliance with if there's somebody that is an independent contractor, the government says actually should be classified as an employee. That means that they're saying you should have been collecting and remitting income taxes and paying part of the payroll tax as well for those employees. It's a big violation if you're not doing that. And it's one of those things where I think there's a lot of independent contractor relationships that have not been reviewed since these rules changed. So please do make time to look up the test and see how confident you are that your independent contractor relationships are on the right side of the new standards that have already gone into effect this year.
All right, and we have resources on our website related to all of these subjects. You can search for them in the search bar at the top, or you can reach out to us, sbam@sbam.org, if you have any questions. All right, let's move into our Data Monday report.
There are a lot of things on today's Data Monday report, so I'm going to go through pretty quickly, maybe with a little less explanation in each one of these items. The first one that I will share with you is gross domestic product. So gross domestic product came in at 2.8%. Now this is real GDP, so this is net of inflation, and it's a very, I'll say very average looking, nothing alarming about it, nothing to write home about, just solid. Look at the history there. You see it looks pretty average, so there's nothing particularly noteworthy about it, except for the fact that it is, GDP is a big deal. All right, the payrolls. This is the one that has got people kind of spooked, and it's for a couple of reasons. So you'll notice that the payrolls over here was 12,000. So this is the national numbers, not Michigan. So 12,000 is a really small number, and it has dampened the enthusiasm for the stronger than expected, more than $200,000 number the previous month. Remember last month it was like the Federal Reserve was really concerned about jobs and the economy, and so they had really set expectations for interest rate cuts to start to make sure that we don't run into any problems in the economy. And then all of a sudden this jobs report comes out and it's way higher than was expected, and so it made me question, hey, are they going to do are they going to be as aggressive in interest rate cuts if the economy is still hot? And then it's down to 12,000 jobs. Now, a couple caveats with this. We had this would be the month where we had the multiple hurricanes, and two states in particular that were hit really hard, North Carolina and Florida. And those types of events do impact overall numbers. But when you look at the industry numbers these are the same numbers presented in a couple of different ways. You've got on one side, you got like production of goods from services separated out. That's on the left-hand side of your screen. On the right-hand side of the screen, it is from the biggest gainers to the biggest losers. And so remember, overall, it was plus 12,000. So basically even, but a little bit on the plus side. But what has really spooked people about the condition of the economy is if you look at the two biggest downsides, two biggest down numbers, they're both private sector dominated areas. So manufacturing, which is obviously a private sector activity, and then professional and business services. Those were the two biggest negatives. And the two biggest positives were education, health services, and direct government hiring. In fact, if you take education, healthcare out of it and just look at government was up 40, but the total for the entire country was only up 12. And so what that means is that without government jobs, the private sector would have contracted, even if you threw in education and healthcare, which are very largely driven by government spending. So these are definitely concerning numbers that I think now is kind of like back on the side of on the favoring interest rate cuts by the Federal Reserve. I feel like we get whiplash on these things, where you got these numbers up and down and up and down. All right, we've got unemployment broken up in a couple different ways here. So unemployment in the blue is there in terms of permanent jobs. So people that have left work because their job was permanently eliminated. And then the orange line, which is kind of flat, are the temporary layoffs. So as I look at this, it's hard to tell a lot of stories from it, but it clearly there's an upward trend on permanent job losses, but it really does look like that um, there is more elimination of jobs as opposed to temporary layoffs in terms of when people are looking at, do I really need this position? They're not doing temporary layoffs as much today as permanent decisions. Unemployment, 27 weeks over, and then also as a 27 weeks and over as a percentage of the total, and then the gross numbers. So there's an x-axis on both sides of this graph. And as you can see, just the longer term unemployment is inching up too. So the previous one was job losses more current, and then the longer term. So just edging up. So this would be the sort of thing like last month seemed to be an anomaly. Things bucked the trend and looked more positive than normal. And I would say that the old trends have kind of taken back over the same ones that had inspired the Federal Reserve to make interest rate cuts and say, you know what, we're going to focus on the economy more now than more than inflation. And then you'll notice on labor force participation. So at the top, in orange, you got among men, and purple you have among women, and then the average for the country right in between. So you see a little bit of a downward, a slight drop in labor force participation. Now, you can have labor force participation go up and down, and some reasons are more concerning than others. And unfortunately, this month, those prime working years of age 25 to 54, those are the biggest. That unfortunately, where you saw it go down was in the area would be the most concerning. It would be the prime labor force, down about 0.5%. And so, decent size drop over such a short period of time. So 25 to 54-year-olds being kind of the most generally considered the most important part of labor force participation. Then looking at personal income compared to personal consumption expenditures. And these are looking at nominal dollars so that you can look at income increases month by month, and then essentially inflation increases. This is not CPI, it's PCE. So Consumer Price Index is the one that's more famous. It's on the news all the time. The reason why the Federal Reserve looks at the personal consumption expenditures, and the reason why I think that it's actually a more important measure is because with CPI, they look at a very specific basket of goods, and they assume that when prices go up or down, people don't make different spending decisions. It just looks at this thing went from this price to that price, and that's just the increase that they record. But sometimes when things go up, people make alternative decisions in terms of what they're buying. So they might substitute other things in. The PCE looks at the actual cost experience of people because it recognizes that people make substitutes and changes in their spending patterns as prices rise. So as you can see, month by month, you've got the cost increases slightly more than the income growth, not enough to wipe out the kind of differential. You got still positive real income growth over the last year, actually over the last 2 years. The personal savings rate as a percent of disposable income, that is starting to trail off. So it was kind of holding pretty steady at a moderate rate, and but it's definitely showing signs of trailing off a bit, which is not particularly surprising given the other data that we have looked at. All right, so we're going to get to after this bit of talk on inflation, we're going to get to a couple things on the election I thought were particularly interesting, although I'm not doing any predictions to let you know. But the personal consumption expenditures, this is that inflationary measure that I had meant just explained a few minutes ago. So you got the consumer price index, and then you got this one. This is the one that is that I think is a little more relevant to the actual experience that people have on the ground. So you'll see the blue line that is going down a little bit more than the orange line. So the orange is the core and the blue line is the overall. So you see the blue line going down more because some major commodities have come down, gasoline most notably. And so that pushes the overall number down. We take the commodities out, food and fuel. You see it's a little bit higher at 2.7%. So not too far off the target that the Federal Reserve would be looking for. But when you look at this chart here, that is making that's showing the experience month by month, you can see that it actually is, there's movement over the last several months that probably the monetary policymakers are not overly nervous about, but this is kind of an upward trend that after getting quite low there for a month anyway. So I think this is something to keep an eye on right now, given the jobs report. There's no question in my mind that the Federal Reserve is still on interest rate cut mode. But this is one that I would keep an eye on, that if it got much higher than this, that you might see them pause that for a little while. All right, let's talk about the elections. So lots of early voting. So mail-in voting and early voting. In Michigan, by the way, early voting is brand new, right? We're just our second cycle doing that. So absentee voting has been around for a while, but like going and voting early. So you hear a lot of record-setting early voting, and of course everything's a record because it's brand new. Um, but the but you really see early voting taking off all over the place. So you see a lot of early voting that is happening. And this is state by state, and you can see Michigan is right there with other states, even though it's a new process for us. And then up at the top, though, you can see for those who have voted early, and there's 76,438,000 as of the printing of this, over 76 million people had either mailed in or cast early votes in this election. That's pretty huge. 53% women and 44% men. This is there's lots of talk about like gender gaps in this election, and even voting methods have that. So more men say they're going to vote on election day, and more women do it earlier. And also voting preferences have really kind of separated out too, just kind of really fascinating alignments, realignments, and divides that are happening across this. So I want to cover several views at what's happening around the country, but especially looking at the swing states. So I'm going to define the swing states as these seven that are, but I would certainly acknowledge there are several other. If there is a polling error, you will see that polling error could bring many more states into this conversation. But generally, the traditional blue wall states of Wisconsin, Michigan, and Pennsylvania, think of that as one grouping in what they'll call what many people refer to as the Sun Belt states. Among these swing states are these four: North Carolina, Nevada, Georgia, and Arizona. So what Nate Cohn, who's an analyst and a pollster for the New York Times, basically he looked at it and he said, all right, you got, here's their polling index, and they do some qualitative analysis on pollsters and make some adjustments based on that, which is a little different than another one I'm going to show you in just a minute. But so they have some qualitative analysis, but here's where they show everything about as close as you could imagine, right? So but if the polls missed, if there's polling errors like the last two cycles in 2022, Democrats were underestimated in the polls pretty systematically, or you could say Republicans were overestimated in the polls. If the polls missed like they did in 2022, here's what these states would look like. Okay, so still pretty close, but clearly a shift. And if the polls missed like they did in 2020, because remember that even though Joe Biden won in 2020, the margin of victory was a lot smaller than what the polls showed. If the polls missed like in 2020, well, this on this far right-hand side of the column is what each of these states would look like. So it's really a fascinating look, and there's no way to predict ahead of time which way polling errors are going to happen. There's naturally they're never going to be perfect. It's a sample of a very large population, but nevertheless, a fascinating way to look at those 7 swing states. Now, here's a couple of others. On the left-hand side, you have the Real Clear Politics average. So this one does not do a qualitative analysis. They don't judge who's, a better pollster or not. They just poll comes out, they put it in the mix. And so this would be kind of the widest view, including partisan pollsters and the ones that would be weighted heavily in the previous slide that we just looked at. So as you can see, same 7 states, and not a lot different really between this one and that one. Just again on the margins. Remember, normal margin of error on these polls is like 4 to 5%. So very, very close. And then on the right-hand side, the Silver Bulletin. So this is Nate Silver. By the way, Nate Silver's from Michigan. Went to Michigan State. But anyway, he's got a few more states in here. He's included Texas and Florida, New Mexico, New Hampshire, that really and most other places aren't viewed the same way as swing states. So here you've got the polling averages and where they stand. Again, pretty similar to the others. Definitely a qualitative analysis. He rates pollsters by past accuracy, and these averages have those weighted in there. And then you can see from last week and last month kind of which direction generally the polls have moved. There's been a lot of discussion on whether there's been herding in polls. In other words, pollsters that are just kind of like going to show a closer election so that they can't be accused of missing by a lot, just show it close or even, in which case the polls aren't really telling us much in the last week or so. But there is I think basically if you look at the candidate schedules just today, you'll see where they think their path to victory is. So Vice President Harris is spending all day in Pennsylvania. So if you look at her path to victory, she really needs to win the blue wall states. I wanted to add this too. Why did they call it the blue wall? Well, look at these: Michigan, Wisconsin, Pennsylvania. I mean, just look at the election outcomes in presidential elections going back to 1988. So they've been considered like the blue wall for a long time. And obviously 2016 was a big exception to that. But clearly for the vice president, this is the place where this election is going to be won or lost. But Pennsylvania is the main one where it just seems to be the closest. Just poll after poll after poll shows it razor thin close in that election. So just kind of going back to it, that is clearly what the vice president is most concerned about is Pennsylvania, just based on time. Although I will say that all day Sunday, she was here in Michigan as well. But again, another one of those blue wall states. She wins those 3, good chances are that she would go on to win the election. With respect to former President Trump, he started the day in North Carolina and then is in Pennsylvania, spending a bulk of the day in Pennsylvania, and it's actually going to spend the very last part of the campaign, as is kind of a tradition for him at this point here in Michigan. So pretty similar between the two of them. In terms of their priorities at the end, because both of them realize that if they win these upper Midwestern states, that they'll win the presidency. And in the Sun Belt states, and a lot of people are starting to consider them a little bit less competitive in this election. But if there's one state that Republicans look nervous about, I would say is North Carolina. So and it looked that way, and then part of the last day before, their former President Trump is in North Carolina to start the day. So much that is happening across the country. It is absolutely not clear who's going to win. Although I will say that if there's a polling error of just 2 or 3% in either direction, it could look like a landslide on the Electoral College map. And that's the thing that an election this close is nearly unprecedented. And so I think we're in for probably a late night, but who knows if there is a systematic polling error, 3% in one direction, it holds up across the country, it might not feel so close.
All right, so if you are not one of the people that took advantage of early voting, make sure you go vote tomorrow. If you are interested to know who our small biz PAC endorsed for the Michigan House of Representatives and the Supreme Court, you can find that on our website. Have a great week, and we will be back here next Monday at 3 p.m.
See you next Monday.